Hi, in episode 10, we take on smart money. Every piece of data I've shown you so far came from exchanges: price, liquidity, options, order flow. That's data someone shares because they choose to. These are the biggest players on the market, funds running billions. When they build or unwind positions, they move capital next to which retail is just noise. You won't always see it on the candle right away, but it's their positioning that sets the backdrop everything else plays out against. And that backdrop is exactly what this module shows you. Smart money pulls data from the US futures market regulator, and here's the key. Institutions trading Bitcoin contracts on the Chicago Exchange are legally required to report their positions every week, down to the contract. It's an official filing in which pension funds, hedge funds, and market makers must state which side of the market they're on. That filing is called the COT report, Commitments of Traders. It's published by the CFTC, the US Commodity Futures Regulator. This module takes that report and translates it into plain language. Before I show you anything, you need to know who is in this filing, because the whole module is a story about 5 categories of participant and nothing else: asset managers, institutional investors, pension funds, index funds, ETF issuers, long-term players who buy because they want exposure. They're called real money. When they accumulate, it usually means something. Leveraged funds, hedge funds. They move faster with leverage. And very often, they're not betting on direction at all. In a moment, you'll see why that's the most important sentence in this episode. Dealers, intermediaries, banks, and market makers. They don't bet on direction. They hedge their clients' positions. It's the same function the options dealers performed in the options map episode. Other reportables, large players who don't fit any of those boxes. And non-reportable, everyone too small for the regulator to require a filing. That's retail, you and me. Remember those 5? Everything you see today is a story about what each of them is doing. At the top, you pick an asset: Bitcoin, Ethereum, or Solana. Only those 3, because those are the only ones the regulator files on. Below, 4 tiles. That's the entire weekly report, condensed into 4 numbers, and notice something that makes life much easier. Each tile carries a caption telling you what kind of money it is. Asset manager. Net, captioned smart money. The net position of institutional investors. Lev funds net, captioned speculative. The hedge funds. Dealer net, captioned hedging. Because dealers don't bet, they hedge. You don't have to remember who's who. The screen tells you. And the 4th tile. It's called basis trade. Remember it. In a moment, it'll turn out to be the most important thing on this entire screen. Next to each number, you get the week-on-week change and a plain language label: accumulation, capitulation, neutral. And one thing to make these numbers real: one contract on this exchange is 5 Bitcoin. So when you see institutions adding 400 contracts, that's 2,000 Bitcoin. Real money. Below, 3 tabs: charts, positions, and verdict. The charts tab. You start with the market snapshot. One picture that says it all: who is buying and who is selling. Short positions on the left, long on the right. Each of the 5 categories gets its bar. And above the chart, the system spells out who leads on each side. And here you see something odd. Dealers lead the long side. Hedge funds lead the short side. And it isn't a slight edge, it's dominance. Remember that picture? It'll come back. Below, 3 historical charts. The size of the whole market, with a percentile telling you whether this many open positions is a lot today or a little. The net positioning history of each group, and the long to short ratio. That last one is worth understanding. Above 1, the group is net long. Below 1, net short. A ratio of 1.5 means 50% more longs than shorts. 0.7 means a third more shorts than longs. And finally, position concentration. what percentage of the market each group controls on each side. When that dominance shifts, capital is rotating. The Positions tab, hard numbers. The position table, 5 categories, their long and short positions, their percentage share, and the change since the last filing. Sort by any column. Below it, the change analysis. What each group did over the past week. Added longs, added shorts, or closed out. And here's the part I like most. The system doesn't leave you with a chart. It explains it in a sentence. It says it outright: institutions covering shorts, bullish pressure. Or funds cutting longs, adding shorts, bearish flip. You don't have to interpret anything yourself. At the bottom, the weekly heat map. Rows are groups, columns are weeks. Color is the strength of buying or selling, measured against the past year. At a glance, you see who changed their mind and when. And now, the Verdict tab. This is where the system folds everything into one thesis. At the top, a summary line, a score, and a confidence level. The score runs from -3 to +3. It combines 4 things: institutional direction, historical extremes, the freshness of the filing, and a basis trade filter. Remember that last one. You're about to see why. Below it, 3 readings and a conclusion. Look at the second one. Let's go back to the Market Snapshot for a moment. Remember? Hedge funds dominated the short side, enormous positions, 2/3 of the entire short side of the market. If you saw that number on its own, you'd think institutions are betting on a Bitcoin crash. The market is bearish. Get out! And you'd be wrong. Because the system says it right there, plainly. Note, rising shorts at hedge funds plus rising longs at dealers suggest a basis trade. This is not a directional bet. What is a basis trade? It's arbitrage. The fund buys Bitcoin on the spot market and simultaneously sells a futures contract, because the futures contract usually costs a little more than spot Bitcoin. The fund pockets that difference and waits for expiry. And here's the key. It doesn't care whether Bitcoin goes up or down. It's hedged on both sides. It earns a few percent a year. But at the scale these funds operate, that's very serious money. Its short position is not an opinion about the market. It's a technique for harvesting a spread. And that's why the 4th tile up top is called basis trade, not hedge fund shorts. The system tells you outright what those positions actually are. That's the most important thing in this entire module. It doesn't just show you the data, it protects you from misreading it. The third reading is just as interesting: retail positioning. When retail sits at a historical extreme, that tends to be a contrarian reading. The crowd at the very bottom is rarely right. And to close this section, one thing the product itself states plainly. The confidence you see here is the historical reliability of this pattern, not the probability that a trade will work. Those are 2 completely different things. Don't confuse them. Below the verdict, a section called Watch Next Report. 2 columns. On the left, what would confirm the thesis? On the right, what would invalidate it? And next to every condition, the system tells you how far you are from the threshold, or that it's already been crossed. That's the checklist you run on Friday evening, when the new filing drops. And now, something I have to be honest about. This data is not live. The report comes out on Friday, and the data inside it is from Tuesday. You're working with a 3-day lag. That means one thing. Smart money is not a timing tool. You don't open a position off it. It's context. It answers, how are institutions positioned, not what do I do right now. At the bottom of the module, there's an education section. What the regulator's filing is, why it matters for crypto, and exactly what a basis trade is. Everything you saw today is an analytical reading and educational material, not investment advice. FOCSAL is not a registered investment advisor and doesn't make decisions for you. And that's smart money. The only data in the entire platform that nobody publishes voluntarily, because they have to. In the next episode, we take on AI Analyst, the module that will explain any report on this platform in plain language. Go to FOCSAL.com, subscribe, and I'll see you next time.